what the hell happened on Friday? So before we start, let me just take a little bit of wine because it's been a pretty wild week in the markets last week. That's a good one. So now let's see what I saw on Friday morning. And as everyone already knows, President Trump and First Lady Melania tested positive on COVID. Well, that's really bad news for them, and I hope they're going to get well very soon. But of course, that has effect on the markets, and we saw on Friday a huge pullback. Therefore, we're going to talk today what's going to happen next and how this could affect the markets and how you should stay prepared, of course, and how you should protect your gains and not risk too much of your capital on and already realized gains, of course. Now, before we start, let's take a look what happened on Friday. On Friday, we had this huge pullback, and for some indices, some of them recovered pretty quick. So we have here the ES, which had a huge pullback as well. It almost tested the 3,286 area. But after that, it recovered pretty well, it bounced quickly, and it got bought up. Now, of course, it is very important to understand, are we going to stay above these levels, or are we going to see another breakdown and another pullback? Now, guys, just look at the price action in the previous weeks and what happened in September. Like I always talked in a couple of my videos, September and October are normally every year very volatile months, and now especially combined with coronavirus, combined with election, and now combined with COVID for the President Trump, this could affect the market a lot, and we can see a lot of volatility, a lot of pullbacks. And if you are a trader, a swing trader especially, who is trying to buy stocks and profit on the long side, you have to be very careful and of course try not to give your profits back and protect your capital right now. Like I already said, we have this huge pullback, and we built here a little bit of resistance around the 3,420 area, and we pulled back and we stayed here below those moving averages. We have here the 9 moving average and the 20 moving average, and this here is the 50 moving average. We came here, we stayed here below, and we pulled back until here, which is the previous low. This here is support area. This is the low of here. Just look at this part. This is the low here at 3,183. So we tested this area, and then we bounced back up. We tried to reclaim those moving averages again, but then on Friday we had this big pullback, and of course, the reason for that was not only the COVID, but it was also the non-farm payrolls, which were very bad, and we have bad reaction based on that as well. We are right now still above that moving average, but based on the news over the weekend, based on that the President Trump is hospitalized right now, we don't know what is going to happen. Therefore, we have to remain cautious. We have to be careful with opening new position, and especially we have to be careful with risking too much capital right now. This right now is the ES, like I said. If we take a look at the Qs look very, very terrible. So I don't like this chart at all. Just look at the huge drop right here. We gave all of the gains from August in a matter of a week. We had this huge drop with the elevator, like a lot of people are saying out there. And we tried to bounce here. We built a little bit of resistance area, which is the 11,540. And we couldn't reclaim that here the first time. Now we're testing this area the third time. And instead of reclaiming, we see this huge big red candle. Guys, this is not a good sign at all for the bulls. And if we don't see a little bit of green right here on Monday, this could get ugly here. So I'm just honest with you, this could get really ugly. We can test one more time the 10,660 area. But if we are not able to hold this support area right here, we could drop even more, and then The next one would be the 10,270 area, and after that we have the EMA, which is the 9,890. Now, of course, I hope we are not going to see that huge pullback, but like I already mentioned, September and October are extremely volatile months. These are normally months where you have to be patient, and those are markets, like I am saying a lot of times, they're risk on and risk off markets. And right now we are in a risk off market where you should not risk a lot of your capital. If you're trading, try to build very small positions, try to take profits quickly. Do not stay too long in positions, because this is exactly what happens if you are positioned with a lot of positions in big size. If you have those huge pullbacks, you're just giving back a lot of your gains, and of course you don't want to do that. Therefore, just be aware of what is happening right now and adjust your risk based on that. Now, of course, as a trader, it is very important to understand the market cycles and what is the current market cycle. Based on that, you can, of course, adjust your risk and your strategy. For example, let's take a look at the current market cycle and at the market cycles which you can risk more money, especially in order to gain more money. Now, let's start with this accumulation cycle. This is basically a sideways cycle where you have a little bit of consolidation, and then we're breaking out of that range and starting a nice uptrending cycle. Those uptrending cycles are the cycles where you want to be in as a swing trader, and as a stock buyer you want to be part of those uptrending cycles, and this is the cycle where you have to be aware of, and you can risk a lot much more in order to make much bigger profits. Of course, those cycles, they last only for a couple of months. You don't have those cycles during the whole year. For example, right now we're currently transitioning into a distribution cycle. Those distribution cycles are basically as well sideways market cycles where you have those big ranges and you don't know if we're going to see another highs or maybe a downtrending cycle. Therefore, if you see those big ranges like we are seeing right now currently, you have to be aware, okay, volatility is kicking in. We don't know what is going to happen. I better have to be cautious, because if we start right now a downtrending cycle, you don't want to be in a position where you're long right here at this cycle, and then you are going to get stopped out in the most of the stocks and you are going to experience losses, and then you're going to be part of a downtrending cycle. In this case, the best thing you can do is just stay on the lines, make sure you understand what's happening there, and as soon as this downtrending cycle is over and we start a new accumulation cycle, after that you can position yourself and you can start participating of this uptrending cycle, which you can see right here on the left. And this would be the cycle or phase where you can risk much more money in order to make bigger gains. But normally those accumulation cycles, especially those distribution cycles, they're very risky, and especially for swing trader, they should be avoided. And if you want to make money on the long run, you have to understand the differences between the different market cycles, and based on those differences, you have to adjust your risk. And this is, in my opinion, guys, after my experience, this is, in my opinion, one of the hardest parts in trading, to understand what is the current market cycle, and is that a market cycle where you can risk more money, which means risk on, or is that a market cycle where you should stay on the lines and maybe just make smaller positions than normally, which is risk off market cycle. Like I said, for me right now, we're in a risk off market cycle. We have a lot of volatility right now, and we don't know what is going to happen in the election. We don't know the health conditions of President Trump. We don't know if we're going to see a new stimulus check maybe where it could drive the markets to the upside. So there are a lot of unknowns right now. That's why we see this huge volatility, and the sooner you are aware of all that, the better trader you're going to become, and of course the more money you're going to make and the more consistency you're going to be over the long run. So that's it for now, guys. I hope you understand those differences. I hope you're aware of the current situation, and stay safe. Don't risk too much of your capital. Until next time, bye bye.